Okay, so we've heard the phrase "what goes up must come down." Well, what goes down must come up as well. What's going on?
This one is hard to explain, Sean. It's just there's been so many things happen that were really hard to quantify from a fundamental or even from a technical perspective. You know, why did the market come down so hard in 7-8 weeks? And now almost as quickly, we've seen this market go back $10 in the U.S. on futures in 4 days. So very hard to attach fundamentals to it. There's a lot of outside market forces at play here, both on the up and the downside.
Well, I'm trying to abide by your own rules of never lift a hedge. It becomes incredibly a test of the stomach.
Yeah. Yeah, risk management in these in this kind of an environment, up or down, but especially in this last move, again, very, very hard to, like you say, stomach.
Okay, so let's talk a little bit about some of the fundamentals, though the fundamentals aren't really what's driving this market, are they?
No, again, like I said at the beginning, I don't think I can quantify why the market came down so hard on fundamentals, and now today I can't quantify why it's rebounded $10 either. So is it as simple as saying these markets are so volatile, and we've talked about that a lot, that they're moving that far past what makes sense up or down, and you just get these wild pendulum swings happening that we have to be prepared for. Too much both directions.
Right. So traditionally in the summer, the basis widens. Are we going to? Do you think we're going to see that this summer
here in Canada?
Yes.
Right. I'm going to say yes, but not to the kind of levels that would be kind of historic pre-BSE levels. So we've had a very, and I've talked about that before, a very tight basis right up till last week, and it'll be interesting to see how trade develops tomorrow or Thursday in regards to basis levels. I do think packers here are most certainly going to attempt all they can. They have, even though we've had profitable U.S. packers, the Canadian packers have not been in the same limelight from a profitability perspective. They're going to try anything and everything in their power to widen basis out here. So I'm going to say yes a little bit, but not to the levels we're accustomed to historically.
Okay. So let's look at some of the stuff that's happening in the U.S. Box beef demand. We're kind of moving into summer. How are we looking?
Well, again, we talked, I think, in our last update about the large supplies that we see out there in regards to cattle supplies. That means bigger kills, that means more beef to move, and likely in that environment some sluggish trade. Well, here over the last little while, we've seen actually some better sales, especially late last week, early this week, going into the July 4th holiday. So it's like everybody's kind of on pins and needles. Retailers didn't go long on procuring supply, and so now that the market looks a little better, of course, there's a bit of a scramble to buy product, and so that's pushed the cutout up here as we speak, when this is kind of when we thought it would back off. So again, these things aren't fitting into the puzzle that we maybe would have seen 2 or 3 weeks ago when we last talked, but it's better than expected. For how long? I guess we'll have that chat in another 30 days.
So based on the U.S. economic situation that we've been seeing, does it not surprise you that demand is strong?
Well, again, we're not getting great economic news out of the U.S., but I guess the bottom line is people are filling their tanks and people appear to be buying meat. And again, remember, it's not just beef. We've got some fairly high U.S. pork prices today as well. So it seems to be getting the attention of the U.S. Wallet for now. On the food service side, it was good for a bit, and it'll be interesting to see, again, continue to hear issues at some of the higher end food establishments in the U.S. as far as economic issues.
How do the U.S. export numbers look? Are they still is the export story still kind of saving them?
Well, we had a really robust, of course, first quarter. We talked a lot about how much beef was moving, especially into South Korea from the U.S. Things slowed down. The last data we had was April, and things did slow down off of that pace, but still well above last year, up 30%, and even above the kind of levels that they would have seen pre-2003. So export levels are good, and again, holding their own. They're not still growing off of what we saw in the first quarter.
Where are they exporting to?
Well, you're not supposed to ask that question.
Well, we should talk about it.
Canada is usually in the top 3 for U.S. destinations of beef. But they were #1 in April.
So the #1 in April, the #1 export market for U.S. cattle was actually Canada. U.S. beef is actually Canada.
Yes. And again, well, don't forget, we've got exchange rates play a big part in where beef moves or doesn't move. Guess what happens when we've got a dollar this much over par? It's going to be attractive for product to move into.
So is that a market indicator that there's room to increase our supply?
It's a market indicator that products flow to wherever the market is, right? So whatever the case might be. So can markets get out of line with what's going on in the U.S.? No, I think that tells the tale. Product will move in if it needs to.
Has Canadian demand for beef, kind of gone with that, or is it still stayed pretty level?
From the data, and it's such a lag time to get these demand indicators from a Canadian consumption perspective, but everything would tell us today that we're getting about the same kind of movement we have had on the demand side.
Right, okay, and then, so should I feel bad that this market is really confusing? Like it seems right now that, and you've been an analyst for a long time, but just watching this and following the news, looking at some of the things that have been released, I'm really confused. If as a producer, should I feel bad about that?
This is confusing. I mean, I'm most certainly not sitting here suggesting that anything is making sense today. We're trying to talk about why things aren't making sense. So to try and take that back home and put it into dollars and donuts is difficult. So no, this is a market that's got us all kind of scratching our head, both down and now up. But to try and answer questions why, I can't today.
So do you think, is there a potential that the rest of July, July and August look like the last 2 weeks? It couldn't be that volatile for the summer, could it?
I don't think so. I don't think so. But at the same time, we've just seen some crazy markets that are often driven from some outside influences. So it's, again, this eyes wide open, volatility is kind of a normal now. And so then that becomes very hard to explain.
So are hedge funds leading that? Like, is private equity the one that's like, what's going on?
Well, there's lots of money came into the market as far as watching open interest all through the up. But of course, a lot of that exited through the down. And it's not just cattle. We're talking about cattle today, but you see it in the grain markets and you see it in the other commodity markets as well. So this is kind of a commodity market move that happens both on the up and the down, and hard to predict and hard to explain.
So is it if you can stomach it, it's probably a good lesson in don't lift the hedge. Is it not?
Yeah, and again, I think if you're a 52-week of the year feeder, that you're in the program for that reason, and that's your risk management model, you have to stick to it. You start sliding away from what your model is for risk management, and you will get how do you predict which way to be on this kind of market? You have to stick to your model, and you have to stick to your game plan.
Okay, thanks a lot, Anne. We'll talk to you again soon.
Okay, thanks, Sean.